Inflation is dropping. This is really, really great news for the real estate market and the overall economy. Welcome back, everybody, to another episode of The Brief. This week, let's talk about inventory. Well, inventory, overall housing still seems to be the same, but we know buyers are starting to show up. But I am seeing an increase of open houses. As the weather starts to get a little bit better, I think we'll see more inventory, more houses, more buyers, pending sales, closed sales. So I think we're going to see an uptick week over week here with more inventory. We need it. San Diego only has 3,040 something houses. That's between everything on the market. That is absolutely way too low. But what I can tell you is in the last couple of weeks, the buyer demand, buyer pre-approvals, refinance, a lot of things are here. So the holidays are over, the new year's here. People need to refinance, buy, reposition. So what else is going on in the market? So what I'm seeing a lot of is people that maybe we're going to flip a house, have private money, decided, hey, the market's slowed down. I'm not getting that price. I'm going to go ahead and just refi and rent out and wait for this to come back. And they're probably just going to be waiting for rates to come back down and more buyer demand in the market to kind of get over this hump, whatever the hump is. It's a recession, a slowdown, whatever we're going to call. Also this week, let's talk about Mr. Jerome Powell. I think he's still going to have his foot on the gas. We expect 25, 50 basis points, another one. So we're looking at anywhere probably 50 to 100 basis points more he's going to go. Yes, he's going to put us in the ground and make sure inflation is really going to come down. He's not going to stop. So he could drag this out longer than you expect. But honestly, I think everybody's over this inflation thing. I think everybody's over the Fed, the rate hikes. We might get a few more because inflation is coming down. Look, gas is coming down, food's coming down, rents are starting to plateau. So houses have come down. Things are starting to come down. I think the consumer that I talk to is definitely starting to cut and pull back and get a little bit smarter. Business owners that I talk to are starting to cut back, lay off, and just really make sure they're running lean and mean and not, blowing money and doing crazy things, because now is not the time. I was actually this weekend, I was at my Avenger Mastermind combined with 100 Mil. We're made up of entrepreneurs, real estate investors, online e-com, all that stuff. The big topic, the big focus is about being focused and having clarity in your business. So look, if you're a home buyer, if you're a business owner, if you're a real estate investor, if you're in the real estate space, getting clear. If you want to buy a home, did you get pre-approved? Do you know what your short plans, your long-term, meaning, you might have to do a 2-1 buy down, or are you just going to buy and then refi later? And how much down are you going to put? And what's this? If you're a real estate investor, does it make sense to buy? Is it too soon? And so there's all these things going around, right? Like we really have to focus and have clarity exactly what to do in times like this. The other big consensus was about real estate investors. So flippers, wholesalers, buyers, some are being, slowly entering the market, but definitely people know there's going to be massive opportunity they're predicting. Maybe not here in San Diego as much as other parts of the country, but they are predicting that people got in over their heads. There's going to be opportunities in multifamily and commercial and home. So I think that first-time home buyer will ultimately be the one to come out and win. Speaking of first-time home buyers, that's what we're seeing. We're really seeing first-time home buyers show up. Fannie and Freddie, as I mentioned prior, they're taking off hits, loan price levels, right? So basically, they're making it cheaper, more affordable via rate to get into those homes for first-time home buyers. Down payment assistance programs are going to be big, but interest rates are still pretty high, right? So qualifying is tougher, cost of money is tougher, that payment's going to be higher. So, what are rates going to come down to? I don't know. I think we ultimately will end up with a conventional rate, 5s or the high 4s, and then VA, FHA probably in the mid 4s to low 4s, I think, and that's okay. I don't think we're going to see 3% or 2% unless there's some crazy disaster, which, nobody's planning on. And that's kind of where the rates are. And the Fed, will they pivot this year? I think the consensus is they're going to raise, they're going to remain flat. Just leave it there. Just let it there, let it marinate, let it sink in, let it hopefully keep inflation down. And I predict by end of the year they'd make a cut. A lot of people don't, so we'll see. Still, the consensus, people still think that the Fed's gone too far. They should slow down. They're not reading the right data. They're just being too emotional and this about it. But remember, guys, they'd rather go too far because they can always pull back. You guys learned that in COVID. If they want rates to drop or put money in the system, they can do that like that. How are rates looking this week? Well, rates are remaining, about flat from last week. We did get a good CPI reading that helped. So this week, rates remaining flat. CPI came in lower. I think we're looking at 6.5. I think we were up around 9. So inflation's come way down. Rates remaining flat. I think we're going to see the 10-year Treasury, between a 3 and 350. But look, if it went down to 3%, the 10-year Treasury, that would drop rates pretty easily, about a half a point. And keep in mind, I've talked about this. If you're on my if you're on my email, you'll know I talked about that. The difference from the 10-year and the 30-year fix, the margin's more than usual, so that could shrink too. So ultimately, that's why I think rates by the end of the year, sometime this year, would ultimately be with a 5 or 4 in front of it for conventional loans, jumbo loans, and then VA FHA would be in the 4s, just because of 10-year coming down, inflation coming down, and then maybe that margin that's in there, the safety margin, the insecure margin, the fear margin would shrink down as well. And last but not least, what is the current environment? As I mentioned, really it's the first time home buyers I think are going to show up and win here. If you did not buy a home in 19, 20, 21, 22, maybe you're like, man, I feel like I missed out and I'm bummed I didn't get those rates. I think now, I don't think you missed out. You could have bought at the peak. You could have bought 2 years ago. I think even with the higher rates and the prices coming down, you're still going to win. You're still going to be deals. I think that real estate investors, quickly buying 2 to 4 units, there'll be opportunity there. Commercial's a little bit slower because the reality from the cap rate and what people want to sell, sellers are a little bit in denial. They still think their property should sell at this cap rate, and they still think their NOI is this. So there's a little delusional there and a little setback. And wrapping up this week, that's what I got for you. We'll keep watching interest rates, really watching, hopefully that inventory rises and see if there's anything else that comes out. But look, if you know somebody looking to buy a home, this is a great time to get pre-approved. It's a great time to know what you can qualify for. And it's a great time to go out there. And if you really want to buy, write some lowball offers, write some insulting offers. Like, this is your opportunity. If interest rates come down around 5 and inventory does not pick up, unfortunately, you will see more competition. And yes, I mentioned the word competition because there is competition. I know some of you think, oh, there's no competition. Everybody listing a house, if it's listed okay and it's not out of control, off the rocker list price, you are getting 3 to 5 offers. So there still is some competition. You're not out of the woods. There's not 30 offers or 15 offers or 20 offers to where it makes a huge difference. But look, if buyers' demand kicks up and rates come down and inventory doesn't show up, you will start to see maybe 10 offers. And that starts to create, sorry, buyers, we're not going to give seller credit. Sorry, buyers, we're not going to drop the price. Sorry, buyers, we're not going to fix this or that. And also, sorry, buyers, we want you to close faster, remove contingencies. That vocabulary, those type of things could come back. So keep that in mind. That's why getting pre-approved and seeing what's out there now and what kind of deal you can get, you'd be surprised. Like, people, if you're not in the day-to-day, you don't know what kind of deals people are getting. Those numbers might not show up. You don't know what all went into that deal that closed down your street. You don't know what kind of concessions they got or what the sellers paid for it. You just see a price, but you don't know what exactly credits they got back or what they had to repair and fix, right? So that's not in there. It's not like in the, oh, it's sold and this is what happened. So a lot of people are not understanding the deals that are going down. That's what I got you for this week. Until next week, I hope you guys have a great week. Thank you for watching. If I can ever help, please let me know. Until next week, have a great week.